Good afternoon, traders. This is Christian from Market Trade Group, and this is your end of day market recap for August 1st, Thursday, August 1st. And wow, look at the red on the screen for today. Tricky. Sometimes tricky is the day of the Fed meeting. Sometimes it's the day after. That's kind of what I've learned over time, to just understand that it may take a day for people to kind of let that Fed meeting sink in. One of my thoughts yesterday, why the market was just had such a bid to it yesterday was, a little bit of short covering. I thought that there may have been some shorts that have been in things like the semiconductors and things like tech companies, and it was just a relentless bid all day yesterday. And even the small caps, like they lunged higher, and I really didn't understand why. But that's just me. And sometimes the market doesn't always have to act logically, as I didn't think it was acting logically yesterday, when just everything basically went up yesterday. And I was like, I don't get it. Powell's really not that dovish. The market is expecting a whole bunch of interest rate cuts, and he's kind of like, yeah, we'll probably do it in September, but certainly didn't put his foot down and say, yes, we're doing this. So considering how much the small caps have rallied, thinking that there's going to be interest rate cuts. To me, I was expecting it yesterday, and I had a small cap trade on that expired yesterday, like just same day puts. I had a put spread on, very low cost, like 30 cents, but it expired worthless for hindsight 2020. I wish I would have went out to today, because I did not have that trade in place. But it did take a day reaction, and sometimes that's really a kind of a pain in the neck when you have the right, when you go through the logic and you have the right idea, but you didn't execute it properly with the trade that you put on. So small caps down 3.3%, 3.2% today. Again, I was expecting that move yesterday. Maybe not that big of a move, but I was expecting the small caps to sell off. Bonds were strong. Bonds are getting a lot of attention these days. They are moving up as the economic. So that was partly. It's kind of interesting, because yesterday, and I'm going to keep this video short because we have a webinar coming up at 5 o'clock, so I'll talk fast. But yesterday, the semiconductors were up huge yesterday, and I thought that was because, like, there was 3 stories out on the semiconductors, all positive. One was AMD. Their initial reaction to earnings was up. Number 2, there was a story out about ASML and a couple of the other chip makers not thinking that these restrictions versus China chips are going to be as bad as feared. That was the second story for the chips, and the third story was NVIDIA got an upgrade from Morgan Stanley. That so 3 things caused that. Were some of the catalysts behind the move yesterday in the semis. Today, on the other hand, you had a couple things to. Number 1, I think it was the realization setting in from FOMC yesterday. Number 2 was that the ISM manufacturing data. And again, this is why in the pre-market session, I always talk about how the ISM data can move the market, right? Much more than, like, for whatever reason, like the financial media focuses on like the GDP number, which, again, just Google leading versus lagging indicators. This is macroeconomics 101. If you took a macroeconomics class in college, you know what I'm referring to. GDP is a lagging indicator. It doesn't move the market, but ISM will move the market. Why? Because it's a leading gauge of just like stock prices are. And you can Google leading versus lagging indicators. But that ISM number, that was a decent miss. And we'll get the services number out, the ISM services, which is arguably more important. We'll get that on Monday. But here was the manufacturing coming in 46.8. Reminder, anything less than 50 is contraction, anything above 50 is expansionary, and the ISM service number will be on Monday. So we'll see what we get. Plus, tomorrow we get a payrolls data where they're looking for 140. It would really be hilarious if the number goes higher than expected, because, again, that's the way these data points have been going with the economy. Some are good, some are bad. Hence, like DoorDash, for one, too. Like, DoorDash is up decently in the after hours market, and I have to think. Now, I know the argument too is that folks are lazy. I agree with that, but if people are spending, it's money it costs a lot of money to order food out. But if you're not even going to pick it up, if you're getting it delivered, you have to pay for all these service fees, and then you have to pay for a tip as well. If you have money to do that, and DoorDash is saying that people do, then I just find it hard to believe that the economy is having problems for and again, some I do think that the economy for different class of people is affecting them differently. But I mean, come on, you're paying. I don't I think I've ordered DoorDash once, or I've seen how much it costs, and it's outrageous for that. So again, it goes with the, I guess you could bring up the laziness concept too, but man, it's expensive to order something like that. Plus the food, plus the cost of itself of ordering food. But regardless, let me get back on track. A lot of red on the screen, and so here's where we are. We started the month. We've got new value areas, and we're going to go over this in more detail during the member webinar. But that's a slip. We started inside value and we slipped back outside. So 54.72 is going to be a level to watch. And these swings are getting really large. And the VIX, here's another thing that I've heard people say over the last 6 months. Oh, the VIX is broken, it doesn't work. Such BS. I was going to say such BS. People have no idea what they're talking about. It's worked fine there just hasn't been volatility. People are like, oh, it's 0-day options. Well, where are the 0-day options now? It's such a sorry, I'm not going to go any more into that. But if 0-day options were suppressing the market, then why is it not suppressing the market now? It's just the fact that we were in a low volatility regime for a while. Things have changed, right? There will be pickups in volatility, and that certainly happens, and you kind of just have to play the patience and the waiting game while volatility is high, right? And we did actually take out the highs from where we were about a week ago, so volatility is staying present here. It's not as high as it was back in April, but it's definitely sticking around some. So it did not close on the highs, but that was the one thing that I saw that stood out today. This morning the VIX was around a 16. It opened up, and my thought was, hey, if this is, because people really seemed to get bulled up yesterday, and like, okay, well, the VIX should be slipping below 16 and should be heading around 15 and maybe down to 14. And that's why I watch such things, right? Because it wasn't going down, and that should be happening, especially after a Fed day when volatility is kind of heightened going into a big event. So that to me was a signal for the day. Let's get back to S&P futures, because I'm just going to go over this really quick because then I've got a break here. But we're right at the bottom of the value area for the week, right? This is where we were earlier in the week, and we bounced. So far, we're holding it. Now, we've got some earnings reports that are not exactly stellar after the close today, so it'll be interesting to see if that holds. Right. So again, the value area for the week, giving some really good clues about where there's some support as well as resistance, because we rallied and got rejected at that. And same thing for the Qs, which to a lesser extent didn't get right up there, but they're also a little bit higher than where they were earlier in the week. So um, you can't get too bullish, you can't get too bearish here. You've got to basically not get over the tips of your skis. And we know that also August is a very tricky month. It's one of the worst months in terms of SPX S&P seasonality. So we've got that going for us too. And then IWM, somebody got really mad at me on Twitter. It's really quite comical, because I said, really, IWM hasn't gone anywhere in a couple weeks. And it hasn't. I'm sorry. Now, of course, it made a big move, but it hasn't had any follow through, right? And there has been the range where you could trade it. The dips have been being bought, right? And then you have to sell the rip. But it tried to advance, a bit last week. It got a little bit of strength there at the end of the week. But again, it's to me, the last couple of weeks is just going sideways. So again, it could be consolidating, but you know, it's a question of too, somebody said to me, oh, well, it's the regional banks' fault. They're down 4% today. I'm like, okay, well, the regional banks were up like 15% last month. um you know and then again, you have to ask yourself, like, do you think that the regional banks are going to continue to rally? Like, is that your trade, to be going long regional banks? Then maybe you might like the small caps, but I don't think that you could be very positive small caps and not be very positive regional banks. They're the biggest weight in the IWM, so it's tough. It could still manage to rally without the regional banks, but you probably have to be pretty positive. All right, so earnings after the close, they're not as, like yesterday, they were very good, and we've seen this. Today is probably one of the worst days for some of the earnings reactions, because we've seen some really good earnings reports over the last week. Probably you have to go back to when Google and Tesla reported. That was an ugly day, and the following day was not particularly good. Amazon's down 4%. But interesting, like Meta was up big today, and that really didn't affect the market too much. Team is down. Snap, which is not a great company, is down 16%. Intel, same thing. I get the argument all the time, well, it's cheap. Yeah, well, it's cheap for a reason, right? They're not on the same level as Nvidia or many other chip names, right? They're the laggard. They're the worst one. They should, so sorry to be negative there, but it is what it is, right? I don't trade that name, other than I think I think I bought some calls a couple weeks ago when it looked like that was setting up for a quick technical trade. But other than that, I would never go long Intel in stock, because yeah, it's just not worth it. Let's go on. MKSI is up nice. There's the Dash up 13%. Melly had really good numbers too. They're up 11%. Net. So again, you do have some names going up. Square, I think, reversed from lower and is now up higher. So I'm going to end it there, guys. Hope to see you at the during the member webinar that we're having, where we'll go over more detail. We'll talk about what's going on in bonds as well. Guys, have a great night.